Thank you for joining us for this webinar, Taxes and the Pandemic CARES Act. I'm your moderator, Renee Goodnow from the New York Small Business Development Center. Your host is the Pace University Small Business Development Center. And joining us to talk briefly about the SBDC and introduce our presenters is Center Director Andrew Flam. And with that, Andrew, I'll turn things over to you.
Well, good afternoon, everybody. I know that folks are still trickling in, but I wanted to get started very briefly and just review a bit of information about who we are and what we do. We have really a tremendous group of speakers for you today and some really valuable information. So we look forward to the insights from our speakers. But I want to just kick off with first going to welcome you all. Again, as Renee had mentioned, my name is Andrew Flam. I'm the Regional Director of the Pace University Small Business Development Center. We are one of a group of 22 centers throughout New York State that offers no-cost assistance to entrepreneurs looking to either expand or launch their businesses, and obviously during this period of economic challenges, kind of work through the hardships and kind of figure out how to kind of get yourself through to the other side in terms of some of the issues related to COVID-19. Very briefly, kind of who we are, what we do, and hopefully how we can be of help to you as you're working through all of these issues. Renee, should I guess, can you forward the slide, please? Unless I can as well. Thank you. So we are part of a network of centers, as I said, 22 of us throughout the state. We are administered through the State University of New York's Research Foundation, and we are funded by a variety of sources, both federal, state, and from our local campuses. We are a resource partner of the Small Business Administration, and we're delighted to be able to have our local leaders from the local district office with us today, and we'll introduce them in a little minute. So the range of services that we offer, as I said, next slide, please, Renee, is kind of really focused on one-on-one individualized business assistance and business advisory. So we are all staffed by full-time business advisors, and these individuals work one-on-one with individual small businesses, helping them through an array of issues, whether it's access to financing, whether it's kind of working through, as I said, challenges that are related to COVID-19, marketing and sales techniques, thinking about how to expand or kind of build out, a website presence and social media presence. So think about how to, really be able to operationalize some of these areas. And then, some of the, procurement and certification areas. I think the SBA and other levels of government have a variety of certifications, whether it's small business designations, whether it's here and other kind of valuable, procurement designations that will help you kind of position yourself for contract opportunities. Here in New York State and New York City, there are also minority and women-owned business enterprise certifications. So thinking about to incorporate that into procurement techniques, I think, is also something we're really focused on. And then some of the, overall kind of the operational and kind of, formalizing some business strategies. I think that kind of ties into some of the things we'll talk about today. Thinking about how to make sure that from an accounting perspective that you're really focused on, the important integral components of the relief packages that have been released. But we also do offer a wide range of training programs. Today is an example of that, where we try and bring in trusted advisors and kind of key industry experts to go over topics in more detail and thinking about how that will impact your business, and then ultimately transitioning that material into more of a one-on-one basis with our business advisors, thinking about how to take the material you learned today and apply that to your business specifically. So in the chat, I put a couple of links, one of which is a link to how to find out about more individual webinars that are offered, both through our center as well as through the network as a whole. And then finally, I should make sure I mention, while I expect the vast majority of the folks on the call today do have existing businesses, thinking about how to take advantage and be able to, from an accounting perspective, be able to apply best practices towards these new programs. If you are kind of an individual making the launch of business, or maybe you have a kind of bit of a side hustle and you're thinking about how to be able to formalize that structure, these are the kinds of entrepreneurs we work with on a day in and day out basis. So, and all of our services are offered at no cost, and we'd be more than happy to work with you on that on a one-on-one basis. Next slide, please. So this is kind of a snapshot of kind of the training programs I referenced. So again, this link is in the chat. You're welcome to click through there and find out other sessions that are coming up, both through our center as well as through my colleagues throughout New York State. While we're located here in New York City, we are, I said, a statewide network. And if you're dialing from elsewhere, we do have a counterpart center elsewhere in the state that we're happy to make introductions to you, and you can kind of get those services for free from them as well. Next slide, please. So there's a map of our locations, 8 of us here in New York City, as well as kind of locations throughout New York State, both within some of the larger population centers, as well as depending on where you're dialing in from, there are outreach centers as well, kind of in a variety of communities. So you really shouldn't be terribly far from your local center. And again, all of our services are offered at no cost. Next slide, please. So finally, I want to sort of end up with, we'll talk a bit. I mean, obviously we have a wide range of experts here today, but we spend a lot of time in terms of one-on-one efforts talking through and kind of helping our clients understand what resources are what they're eligible for, whether it's through some of the key and really invaluable programs that have been launched in the federal government that are managed by the SBA, as well as some other kind of state and local resources, thinking about other programs that may be in place that may be eligible for you, that you can kind of take advantage of. And then the final section, sort of thinking about private support. There are foundations and some community-based lenders that have some programs in place really to complement kind of the resources the SBA is taking on you. So thinking about this holistically and kind of what different options might be available for you. Again, sort of encouraging you to connect with the business advisor to talk through and understand holistically kind of what might be available for you. Next slide, please. And we do have kind of just a very brief, I did put in the chat a brief link to counsel and request form. This is what it looks like. It takes you all of a couple of minutes to fill out. And with that, that'll get submitted to our network, and we'll be able to connect you with an advisor again for a free one-on-one session to be able to help you through the one-on-one issues that may come on you and your business efforts. Please do click that and take advantage of our services. Here's our contact info. I did put that in the chat as well. I really wanted to sort of focus very briefly kind of on who we are, what we do, but ultimately sort of focus our efforts today on making sure that I leave as much time as possible for our speakers. I think it's really a dynamite group today. And first off, I wanted to thank you all for being part of this. I'm really delighted to kind of have this array of experts in place. I think that you as listeners, I think we'll get a great deal out of it. So again, thank you to the presenters, and then to my partners in crime, Steve Mezio and Rick Kravitz, I think really for kind of conceptualizing this. I think this is really going to be very, very insightful, very helpful. So thank you all. So the first presenter I'd like to introduce is a longtime partner of ours, Akira Arroyo from the City Bar Justice Center. And their program has been really a tremendous resource for a lot of our small businesses, and wanted to make sure that we built in some time for Akira to talk about the services they offer before jumping back over to some of our other presenters. So with that, Akira, I'll turn it over to you.
Thank you, Andrew. As Andrew mentioned, I'm Akira Arroyo. I'm the director of the Neighborhood Entrepreneur Law Project at the City Bar Justice Center. I'd like to thank Andrew and his colleagues at the PACE Small Business Development Center for inviting me to speak briefly at the start of today's panel, especially with such an impressive lineup of speakers and topics. Next slide, please. The Neighborhood Entrepreneur Law Project, or NELP, as it is more casually referred to, is one of about a dozen programs that operates through the City Bar Justice Center. The Justice Center's mission is to increase access to justice by leveraging the resources of the New York City legal community. Drawing upon our relationship with the New York City Bar, the Justice Center provides legal assistance to those in need by mobilizing lawyers, law firms, corporate legal departments, and other legal institutions to provide pro bono legal services. NELP has been providing legal assistance to low to moderate income micro entrepreneurs who are hoping to start businesses in New York City since 2001. And in the nearly 20 years we've been operating, we've assisted well over 15,000 entrepreneurs and small businesses, and have worked with volunteer attorneys from over 100 different law firms and corporate in-house legal departments to deliver legal services to individuals who saw entrepreneurship as a means of creating economic stability for their households and communities. We provide our pro bono legal services in conjunction with community partners such as the PACE SBDC, and it is through such partnerships that we are able to extend our reach and provide our services through our joint clinic model, webinars, and direct representation. And because of our pro bono and community-based model, when the coronavirus hit New York City and the city's small businesses, we were well positioned to act and assist fast to pull together our COVID-19 remote small business legal clinic. Next slide, please. By mid-March, when New York City had been essentially shut down for all but non-essential workers and businesses, the Justice Center and NELP began working in partnership with the law firm of Kirkland & Ellis and the national nonprofit Lawyers for Good Government to put together a remote legal clinic for small businesses. The model we developed was a way to quickly mobilize the legal community to provide pro bono legal assistance to the city's struggling small businesses. Through our COVID-19 remote small business clinic, we offer qualified New York City-based small businesses the opportunity to receive a free 45-minute limited scope consultation with pro bono attorneys who are trained to assist business owners to better understand and act upon the federal government's stimulus package, as well as other opportunities available through federal, state, and local programs. To date, the COVID-19 clinic has received nearly 1,400 requests for legal assistance from small businesses ranging from fitness studios to hair salons and child care centers. Over 90% of those businesses that have reached out to us are very small, with 10 or fewer employees. And of those 90%, 35% of those small businesses noted that the owner is the sole employee. And throughout the time that our clinic has been running, over 75% of small businesses that applied for assistance initially sought help regarding eligibility for loans and grants under the CARES Act. And about 40% of those businesses also had questions about their commercial leases. What we've seen is that the numbers have flipped dramatically as the first round of stimulus funding dried up, and then commercial leasing became the top issue. But as stimulus funding becomes available again, it's also kind of going back and forth. And where we see ourselves once again is receiving calls from small businesses about the grants and loans available to them. Hence, I can't stress enough the importance of today's program, because as each new round of stimulus funding has become available, the guidelines have changed, mostly for the better as far as smaller businesses are concerned, but there is still confusion. And there remains a great need for programs like today's, clarifying and highlighting some of the biggest changes and benefits available. Next slide. So I won't hold it up any further, and I just want to let everyone know that the COVID-19 Remote Small Business Legal Clinic remains a resource to struggling New York City businesses, as does the Neighborhood Entrepreneur Law Project and the City Bar Justice Center. So for more information about our programming and resources, please see our website, www.citybarjusticecenter.org. And with that, I want to send it back to Andrew and thank you once again for having me here.
Thanks so much, Akira. I really appreciate it. So next up, I wanted to introduce the leadership of the Small Business Administration, or SBA's District Office here in New York. We are joined today by Beth Goldberg, who is the District Director, and John Milano, who is the Deputy District Director. They've been tremendous in terms of making sure that the Board of New York City and New York, I guess the regional small businesses have been kind of met and been great supporters of our efforts and kind of obviously great advocates for small business. We're delighted to be able to welcome them today. So Beth and John, I'll turn the floor over to you.
Okay, thanks, Andrew. I just want to say hello to everybody and to let everyone know that the PPP loan has about 2/3 of the money has been expended, and that in this round of PPP funding, 60% of the businesses that have received the funding have 10 or fewer employees. So to date, $134 billion has been spent and been distributed nationwide to 1.8 million small businesses. Today, we're going to talk not only about the SBA's PPP program, but John and I are going to go through a presentation that discusses the PPP, and we'll talk a little bit about EIDL, the targeted advance, and the shuttered venues grants program. So with that, John, you can start.
Thank you, everybody, and thank you, everybody, for having us here today. Next slide, please. So this is what we're going to be discussing really quickly today is where we are right now, SBA's COVID-19 Economic Aid, the funding options, our loan program details, the PPP and the EIDL, the grant programs, which is the title advance, the targeted EIDL advance, and the shuttered venues opportunity grant, and also where you can get additional assistance. Next slide, please. So Congress intended this round of COVID-19 economic aid funding to support the hardest hit small businesses and those in this underserved segments, including women, minorities, and veterans. The SBA is currently ensuring these programs are launched as quickly as possible to deliver critical economic aid to America's small business and other eligible entities. Next slide, please. So this slide here shows us the SBA's COVID-19 economic aid funding. Our key program, the Paycheck Protection Program, still currently going on through March 31st. Another loan program is the SBA Debt Relief Program. This is a little known program that a lot of people don't really know what's going on, but SBA is making all principal and interest payments on SBA's 7A, 504, and microloan programs. Then SBA has their two loan/grant programs, which is the regular EIDL loan and the targeted EIDL advance, which is a grant program, and then the soon to be open shuttered venues operators grant. Next slide, please. So here are some of the key takeaways from the PPP program. The way the new eligibility works is we've expanded how funds could be used. Borrowers can select either an 8 or a 24-week program. So now we offer what's called a second draw PPP option. So people who've gotten a first draw, which means they've gotten PPP the first time, now have the opportunity to get a second draw. A really big key part to some of the changes on the new legislation is it now allows businesses to deduct the expenses that they're going to get forgiven on their PPP loan. So this is almost like a double benefit. So you're getting the dollars, you're getting the forgiveness, and then you're getting a tax savings on deducting those expenses. Okay. We've also simplified the PPP forgiveness loan application to a self-certification application for loans of up to $150,000 or less. So what does that mean? It means that you still have to use the funds the way they're intended to be used. But if you do that, you self-certify that those funds are being used that way, and you will get forgiveness on those loans. Another big takeaway is we no longer are subtracting the up to $10,000 EIDL advance from the PPP loan forgiveness amount. Originally, a lot of borrowers were stuck with a $10,000 PPP loan because they deducted the EIDL advance. Well, they've reversed that now, and you no longer will have that. The loan will be 100% forgiveness, and the EIDL advance will be a full grant to the small business. Next slide, please. So what is a first draw PPP? It's for businesses that did not receive a PPP loan prior to August 9th, 2020. Eligibility still the same for a first draw PPP. What they've done is they've expanded the coverage for some additional expenses that is beyond payroll that are eligible now for forgiveness under PPP. Like I said before, borrowers can select either an 8 or 24-week loan. Certain borrowers who either paid back their PPP funds or didn't get the full amount will now be able to go to their original lenders and get those funds that if they didn't get the full amount on their first draw PPP. So some people thought that maybe the pandemic wasn't going to last as long as they initially thought and return some of that money. Well, now you can go back to your original lender and get those dollars, those PPP loan dollars, so you get the full amount. To be eligible still, you still have to be in business since February 15th. And the program, like I said, runs through March 31st or until congressional appropriations are exhausted. Next slide. So they've expanded the eligibility for first draw PPP, and this also includes the second draw PPP, where it'll now include housing co-ops, certain marketing organizations, 501c6s, so the chambers of commerce and those other not-for-profits that purposely were left out the first time now can go in and apply for PPP. They can get help. And there are also some eligible news organizations. The businesses that are eligible before are still eligible now, but there are some new additions to the eligibility criteria. Next slide, please. So what's a second draw PPP? Like I said, the second draw PPP is for lenders who did not get a first draw PPP, but there are some changes on a second draw PPP. First of all, you must have less than 300 employees to be eligible. The alternate size standard does not apply here for second draw PPP. You must have less than 300 employees. You have also must show that there's been a 25% reduction in gross receipts. That is either comparing 2019 to 2020, or you can compare matching quarters. So for example, Q1 to Q1 of 19 and 20, and so on for the entire year, making sure that you show a 25% reduction in gross receipts. The amount of the loan is still 2.5 times your average monthly payroll costs, but it's only up to $2 million now. There is a slight change if you're in the food services industry or the accommodations industry, those that begins with NAICS code 72. Now your loan amount that you can get is up to 3.5 times your average monthly payroll, and that is also up to $2 million. And there is a 2483 SD, which is the form for a second draw PPP, but most lenders will have electronic forms on their website to apply for a second draw or a first draw PPP. Next slide, please. So, like I said before, in order to be eligible for a second draw PPP, you must have previously received a first draw PPP. Your covered periods can't overlap. You must use up all your first draw PPP loan money before you are eligible for a second draw. Again, under 300 employees, and you have to demonstrate at least a 25% reduction in gross receipts. Next slide, please. So here's the PPP loan application process. First, you would find a eligible PPP lender. The place to go to first, I would recommend, is the bank that you normally do business with. That is the people who know you the best, and you have your best opportunity to get approval and funding from them. If for some reason your lender doesn't participate or you wish to find a different lender, if you go to SBA.gov/lender match, there if you put in your zip code, you will get a list of eligible PPP lenders that you could reach out to and apply for PPP. After that, the process is totally through your lender. You complete an application through the lender. Like I said, most lenders will have a portal on their website where you can complete the application and submit any documentation that they're requiring. The lender then puts in all that information into an SBA system called ETRAN. They do get an ETRAN number, and that's the approval process. Now, understand that there was some fraud on the first time when we had the initial PPP. So the Inspector General made it so that we had to put in some checks on small businesses. So there is no longer an automatic approval process. Once the lender puts in their information into the SBA system, there is a minimal lender check that has to go through before the loan's approved. Okay. Next slide, please. So what happens if your loan is not forgiven? So it's not an all or nothing forgiveness process. First of all, if you use 90% of the funds correctly and you only use 10% incorrectly, you'll only have 10% of the loan that will have to be paid back. The rest will be forgiveness. And if you have any portion of that loan that is not forgiven, it'll be a 1%. It'll be a 1% rate. There's no collateral or personal guarantees. It'll be a 5-year term, and the payments will start 10 months after you finish your chosen period, your elected period for your PPP loan, or 2 months after you ask for forgiveness and the bank has rejected your forgiveness. So it'll take at least a year before you'd have to pay back any of these PPP funds if you find that some of the loan is not forgiven. Next slide, please.
John, could you go over it's not all or nothing?
I did that already. I told him it's not all or nothing.
Okay.
Okay.
Sorry.
That's
Yeah.
okay.
Mm-hmm.
So borrowers must apply for PPP forgiveness through their lender, not through the SBA. Like I said, EIDL advances are no longer deducted from PPP. Expenses paid with PPP loans are federally tax deductible. Some states do follow with the federal guidelines, some don't, so check with your state. New York State is following the federal guidelines, and there is the simplified forgiveness application for PPP loans of $150,000 or less. Next slide, please. So this is a program that I told you many people don't really know about it, and that's the SBA-backed loan debt relief program. So what SBA did initially was they paid 12 months of all of SBA for existing SBA 7A, 504, and microloan payments. So after 12 months went by, the SBA extended that program for an additional 6 months. So SBA will now make all your loan principal and interest payments on all existing 7A, 504, and microloan payments. Now remember, your 504 loan has 2 components to it. It has a bank loan and an SBA portion. The SBA is only making payments on the SBA portion of the loan. You'll still have to make payments on the bank portion of the 504 loan. Also, your loan must be current in order to be eligible, and more importantly, your loan cannot be in deferment. If your loan is in deferment, SBA will not make those payments. You're going to have to go to your lender, and you're going to have to tell your lender to take your loan out of deferment in order to get those principal and interest payments made for you under the SBA-backed debt relief program. Next slide, please. So from here, Beth is going to take it over and discuss the EIDL and the shuttered venues grant.
Thank you. So the meat and potatoes of disaster work for the SBA is the Economic Injury Disaster Loan, or EIDL. Congress, in the original legislation that was passed and the disaster declared in all 50 states in our territories, ended on December 31st, 2020. The legislation that Congress passed and President Trump signed on December 27th now extended the EIDL loan to December 31st, 2021. The reason that it's important to think about this in your comprehensive loan thinking is that the PPP loan and the EIDL grant are short-term fixes for a short amount of time. And the EIDL loan can carry you through many months of working capital and normal operating expenses, such as the continuation of healthcare benefits, rent, utilities, and fixed debt payments. Again, this is not a grant, it's a loan. So businesses, 30 years for businesses and not-for-profits. The loan interest rate is 3.75% for businesses and 2.75% for not-for-profits. These loans are secured over $25,000 and there's no prepayment penalty. So a $20,000 loan for a business at 3.75% interest is about $92 a month. And for a not-for-profit, it's about $82 a month. So in your thinking and getting you through this disaster, it's important to think about this loan. Before the loan was extended, there were 15 million loans sitting at SBA waiting for review and funding, and I'm sure that number has only increased since the program was reopened. So when you meet with your SBDC or resource partner, you should discuss this as part of your program planning. Next slide, please. The targeted EIDL advance. So there's many of you may have benefited from or know of this grant up to $10,000 that was given out. That program has ended and it's been replaced by what's now called the targeted EIDL advance. SBA will reach out to you if in one or two scenarios. If you received an EIDL advance of less than $10,000, you will receive a letter, an email from SBA asking if you would like to be considered for the full $10,000 amount. This is going to be contingent on whether you are in a low-income community, if you suffered a loss greater than 30% in revenue, and you have fewer than 300 employees. There is a website which I will forward to our organizer for you to be posted. It's SBAEIDL.policymat.com/app. And you could just simply type in your address and it will tell you whether or not, when you receive this letter, you are eligible to continue to apply. Now, a lot of people have relocated during the past year and they're not in business where they were, or they have a new address. There will be rules about that, and you have to meet these 3 criteria in order to proceed to get the EIDL advance, targeted EIDL advance. For those who applied and never received any money, you will be the second tranche that SBA contacts. And again, you'll have to meet those 3 criteria. There's nothing to apply for now. There's no way for you to reach out to SBA. SBA needs to reach out to you. Next slide, please. These are some of the things that you need to verify: your eligibility, your 2019 tax return, your EIN or social security number, your gross receipts to show that it was, you had the 30% impact, and confirm the information in your original EIDL application is accurate, or you'll be required to provide new information. And you must sign Form 4506-T, which allows the SBA to confirm what you're saying with our sister agency at the IRS. Next slide, please. Okay, we've sort of gone over this, that there's only one application, review your information. We can't tell you how many mistakes. There's a number wrong in the routing number. I put in my EIN and then I put in my social security number. I advise everyone to print out all the forms and fill them out, let them sit, have someone check them, dot your I's, cross your T's, and please, please, please take the extra time and make sure everything is correct, because otherwise you go into this other pile at SBA. So just take a time and make sure your numbers are all correct. Next slide, please. Okay, so many people who are involved in the theater and live entertainment industries have been calling us about the Shuttered Venue Operators Grant Program. This is not open yet. It's in Congress this time. Instead of saying SBA, open your doors to all your programs on day one, gave us some time, and this is going through rules right now and being published. If you fall into any one of these categories in front of you, live venue operator or promoter, theater producers, performing arts organization, movie theaters, museums, zoo, aquariums, talent representatives, you may be eligible to apply for a grant. Congress authorized $15 billion for this, with $2 billion being reserved for venues, small venues with less than 50 employees. You must have been in operation, different date, February 29th, 2020, and you cannot have received or applied, thought about a PPP loan in the new round after the president signed the law on December 27th. So this is an either or program. And again, with your advisors, the SBDC, our resource partners, and those that you pay professionally, you must make a decision as to whether PPP is the better route for you or the Shuttered Venue Operators Grant Program. And again, this money is going to be released in tranches. Those having an impact of 90% loss in revenues or greater will be the first tranche, then 70%, and then the SBA will be opening that up, pending money being available after that. Next slide, please. Okay. This is totally, if you pick this box, you can do that box. I've gone over this. Just remember, if you're interested in the Shuttered Venue Operators Grant, you cannot apply for a new PPP. If you received a PPP August 2020 and before, you can apply, but do not apply for both right now. Next slide, please. Just a review of the programs. We have a lot of our partners on the webinar with us. They'll be able to help you through this. Next slide, please. And here are some places that you can keep in contact with current information. The one on the bottom, SBA.gov/coronavirus relief, will get you to every place else you need to go to. So that's really the key one. And I think that's it, correct, Renee? Yep, so thank you, and we'll be around for questions, and I'm going to shoot Renee this email, right? This website to check your targeted grant. So thank you. Back to you, Andrew.
Thanks so much, Beth and John. Actually, I'm going to turn the floor directly over to Rick Kravitz. So Rick, it's all yours.
Thank you, Andrew. Dr. Stephen Mezio and I are honored to assist the SBDC under the expert leadership of Andrew Flam. It's a special honor to introduce Ramona Cedeno, a CPA, CFP, and a personal friend. Ramona is an entrepreneur, founded her own accounting and consulting business. But what uniquely distinguishes Ramona is her active involvement in the small business community, and most importantly, her expert guidance, which empowers business owners to build scalable businesses. Ramona has contributed a number of articles to the CPA Journal, and I'd like to read one brief sentence that she wrote, and Ramona doesn't know this. We featured Ramona in our award-winning series, It's Amazing What CPAs Can Do. My life is busy, but I'm doing what I love to do and helping clients who love the fact that I love doing something they don't. What better combination can I ask for? Ramona is an inspiration to her clients and our profession. Ramona.
Thank you, Rick. And that was a nice, but thank you so much. I have known Rick for a long time, and I started my career as an accountant when I was 18, and I love everything accounting. Like, if those that know me know this. And I think the only other person that I know that loves the accounting profession as much as I do is Rick. So thank you so much for that, Rick. Hello, everyone, and thank you for the opportunity to speak to you today. I enjoy these events, and I like sharing information with our small business community. Thank you to the SBDC and to the SBA and Rick, of course, for this opportunity. A lot of this has been covered already, but I would like to summarize some of what we have discussed, plus give you a few tips as you embark in the application of the PPP loan and the forgiveness and other things that might impact your business and your tax situation. So as we heard before, the EIDL grant and the forgiven portions of your PPP loans are non-taxable. And I think that when I heard that in December, I was super thrilled because, of course, I had good news to give to my business clients. I think it's a great benefit that we are receiving, and we should definitely make use of the funds the way they are expected to, so that we can get our loans forgiven. The expenses that we're using towards forgiveness are non-deductible, which is, it's really a great benefit, as we heard before. And I would like to remind all business owners out there who receive the loans to make sure that they're keeping good records of all their payroll files and the utility expenses and their rent, so that when it comes time to forgiveness, they are ready to apply. There is a lot of, during the application process and even today, we have seen a lot of situations where business owners don't have good records or don't know if they, I think I paid my utility in May, but maybe I did in April instead of during the covered period. So it's important that you review your bookkeeping and all your records to make sure that you're ready for that application for forgiveness. Questions that I get every so often is about grants, and the grants that we're receiving, private grants, in addition to the EIDL that a lot of business owners receive, are the grants taxable? And the same questions come up when we're talking about crowdfunding. In general, all grants are taxable. Luckily, the EIDL is not. And there might be other grants who are given by the government that might not be subject to taxation. So discuss this with your accountant, and if you are receiving taxable and non-taxable grants, please make sure that you are tracking them appropriately in your P&L, in your income statement, so that at the end of the year, when we're filing your taxes, we are not taxing something that is not subject to taxation. If you have a good accountant, a very good tax advisor, of course, everyone out there is amazing, that won't happen. But just to be safe, ask the questions, bring your concerns up, and just ensure that you're not paying taxes on something that you shouldn't. Some business owners are thinking about taking money out of their 401k to support themselves personally, but also to support their business. And we want to remind you that 401k withdrawals should be a last resort if you can avoid taking money out of your retirement accounts. However, if you do have to do that in 2021, and if you did in 2020, as part of the stimulus package, you don't have to pay that 10% penalty for early withdrawal. However, you're still responsible for the income taxes on that money. So be ready for that, because I do get this question every now and then. Do I have to pay income taxes on my 401k withdrawal? And you most likely will have to. Along with that, we have some business owners who went on unemployment, and this is at the personal level. You may have taken the pandemic unemployment assistance, and that is subject to taxes also, the benefits that you receive from that program, through that program. And there are some rules around whether you get the PUA along with the PPP loan. So please get familiar with the requirements around those two, because they should not overlap, and it's important to really understand the rules so that you don't end up in a situation where you're taking funds that you're not compliant with. A few other things on the taxes. We heard recently that if you have business meals from restaurants, they're going to be 100% deductible. That's great, but the bookkeeping is important. So if we have a mix of non-restaurant meals with restaurant meals in there, we're gonna have to separate them. So again, record keeping is so key here. And as we receive loans and we get loans forgiven and we get grants, again, it's important to understand how this should be accounted for in your income statement and your balance sheet. I do get questions around, is my loan income to me this year? Do I book it to the balance sheet as what, right? So let me share a few things, and hopefully you have a good bookkeeper, a good accountant that's helping you with this. But if you're doing this yourself, as you receive a loan that is not income, it's a balance sheet item. The loan that's forgiven, the PPP portion that's forgiven, will be moved from your loans to your equity section. It doesn't hit the P&L. And if you receive a grant that is income, remember to separate it appropriately in the income statement so that it doesn't become part of your gross receipts, which then will impact your eligibility for a PPP loan. And as you pay the loans, and I love what Beth did before with the amount of interest that you might be paying on these loans. But one thing to remember is that as you pay down your loans, the portion that's principal reduces your loan, but the interest portion is a deduction. So at the end of the day, we're paying a little less than 3.75% or 2.75%. And it's important to do the accounting right, to do the split right, because if your payments are booked to the balance sheet on 100%, which I see a lot happening, you're going to be missing out on that interest deduction in your taxes. So hopefully this gives you some idea of where to get started, some things to implement for your business. I'm here to answer questions at the end. Connect with me. I gave you a ton of choices here, except for my phone number. But please follow me on social media and get some more tips about all of these issues. And happy to answer questions at the end. Thank you.
Okay, thanks so much, Ramona. I really appreciate it. Rick, I guess I'll turn it back over to you to introduce Alan, please.
Sure, thank you, Andrew. So I'd like to introduce Alan Gassman. Alan, and thank you so much, Ramona, that was great. Alan Gassman is the expert's expert, and we are extremely honored to have Alan join us today. He's a board-certified trust and estate lawyer with an LLM in taxation, has written 5 books on legal topics. That's a lot of books. He's a regular contributor to the CPA Journal. Alan's practice includes representation of many small business owners and professional practices. He's a nationally featured speaker, and over 1 million people have read his blog on Forbes.com on the PPP and related rules. And Alan does not know this, but I've been told by a close colleague that actually Alan read and digested the last federal legislation that ran about 5,000 pages. So Alan, thank you for joining us today.
Thank you very much. I want to mention that my colleague, Brandon Catrin, who is actually the brains behind the operation, is with us. And he never lets me go alone, so he can correct me as I proceed. I'm going to spend 15 minutes, which in lawyer talk, that's half of a billable hour, by the way, on some things that I think you want to know, whether you are a business or a worker or a CPA or accountant advising businesses and workers. The first thing is that the employee retention credit is a huge opportunity. Last year, you had to choose between a PPP loan or the employee retention credit. This year, you can go ahead and go back and get the employee retention credit from 2020, even though you got your PPP loan. And we have provided you with our ebook on the employee retention credit guide. And I hope you'll take a look at it and use it. We've got other articles here for you, and you can always go to Forbes and just search Forbes Gassman PPP, and we've written about every major part of this program. So let's go to the next slide here. All right, I strongly suggest that you print this slide out and Scotch guard it or laminate it and take it in the hot tub and read it carefully, because this is almost everything you need to know about these programs. So across the top, I have the programs. You've got the first PPP program from 2020 that I think you know all about. Then you have the PPP Second Draw. Now, to get the second draw, you have to demonstrate a 20% reduction that your business suffered in receipts for the second, third, or fourth quarter of 2020, as compared to that same second, third, or fourth quarter of 2019. So if you had that 20% reduction.
Yeah, and Alan, just to jump in real quick there, it's actually 25%. I think there's just a typo on the slide.
Sorry about that. If you had that 25% reduction, then you can get that loan as the SBA folks indicated. If you are a restaurant or a for-profit food service or an RV park or a hotel or motel lodging company, then you get 3.5 times your average monthly payroll. Now, one thing that is very, very important is the next column down here. As with your first PPP loan, you must indicate on your application, this is under penalty of perjury, that the loan is necessary to support the ongoing operations of the business. And even though the SBA has announced and published that they will not be questioning necessity on loans of less than $2 million, that doesn't mean that the Department of Justice or a whistleblower is not going to question necessity. So if the good news is that you got your first PPP loan, you had every right to get it because we had no idea what the economy was going to do. Now you've righted your business is profitable, things are going fairly well, it's going to get better after the virus subsides. You may not meet that necessity test, and you may want to talk to a lawyer, whether it's in the PACE program or outside of the PACE program, as to what the risk would be of applying for that loan if it may not be necessary for you now. The employee tax retention credit is the next item that you see. It's the third column. And to get the employee retention tax credit for 2020 in a particular calendar quarter, that quarter had to have receipts that were 50% or less of the same receipts for the previous calendar quarter. So you go the second calendar quarter of 2020, which was the worst for most people. If your receipts for that calendar quarter were less than 50% of the second calendar quarter 2019, then you can go ahead and fill out the form to get that credit. And it's going to reduce your employment taxes, or they'll give you a net check back if it exceeds what your employment taxes are now. And there is no necessity requirement. You don't have to need this money. You are automatically entitled to it. And it is up to 50% of what you paid each employee for that calendar quarter, but not exceeding 50%. So if you paid an employee $9,000, you would get up to $4,500 as a credit. If you paid an employee $12,000, you would get up to $5,000 as a credit. And that is cumulative for the year. So even though you may qualify for several quarters, you were only going to get for 2020 up to $5,000 per employee, no more than 50%. If you qualify for the second or third quarter of 2020, you don't have to have a 50% drop to get to the next quarter. It's a much lower drop requirement. So you'll want to read the book, learn all about it. But let me tell you now about the 2021 employee tax retention credit. It is even better. It's much better because you only have to show a 20% drop in revenue as compared to the 2019 or to the previous calendar quarter. So if I have a revenue of $100,000 in 2019 for the first quarter, and my 2020 quarter was 80,000 or less, then I can qualify for this credit. So you compare the 2021 first quarter to your choice of the fourth quarter 2020 or the first quarter 2019. And if you have less than if you have a 20% or more drop, then you get the credit. And the credit is up to 70%, not exceeding $7,000 per employee. And it replicates itself. In 2020, you could only get up to $5,000 per employee. In 2021, it's $14,000 for the first and second quarter. And if you know you're going to be able to qualify for this first quarter, you can apply for it now and get cash in advance. Again, no necessity requirement. But there is one complexity you need to know about. And that is, as you're all aware, when you got your PPP loan, you could use the money in up to 24 weeks. It's not 8 or 24. It's basically as long as you need it until you've spent it all in the right way. At least 60% of that has to be spent on payroll, unemployment expenses, and health insurance. And up to 40% can be spent on the other things. If you are going to get the employee retention credit, you cannot use the wages that provide you with that credit for your PPP wages. So you might have had your PPP loan forgiven after 12 weeks. Now it may take you 16 or 18 or even 24 weeks, since you can't use the same wages for both the credit and the PPP loan. Now, Brandon, what happens if I've already applied for my PPP loan? I've already used those wages in my application calculation. Now I want to change and use a broader period of time. Am I able to do that?
Yeah, well, it depends on whether or not the SBA has issued that final decision or not. If the SBA has approved the forgiveness application, I believe that you're stuck with what you reported on that application unless we have some procedures to later amend. If the SBA hasn't approved anything, I think you can contact them or contact your lender, request to amend your application, and then possibly reallocate the way you've spent the money. So you have now more wages that are eligible for the retention credit and not necessarily counting towards your loan forgiveness, since you can't use them in both places. One other thing to mention on the tax credit to the employee tax retention credit is that you don't necessarily have to have a revenue reduction to qualify. If your business was partially suspended by a government order, for that number of days and that length of time that you are subject to that shutdown order or suspension order, you can also qualify for this retention credit. And the IRS has published FAQs on the IRS website that go through what's considered to be a suspension of the business. And it's pretty liberalized. The common example is a restaurant. If they were limited on indoor seating only, tables had to be more than 6 feet apart, so they had to take out 3 or 4 tables to make that work. that's considered a partial suspension. Even if they're open for takeout, even if they're having outdoor dining, even if they're doing better than they were, just because they're limited indoors, that's considered a suspension. So a lot of people can qualify for that credit under the suspension of the business test as well.
Very good, thank you. Now, the money you get for the employee tax retention credit is taxable. Technically, it's not taxable, but you're not allowed to deduct what you pay with that money you receive. So you will have to plan to pay income tax on that. I'll briefly mention that you've got the HHS Provider Relief Program if you are a medical business or a medical practitioner, and that came in based upon a formula. If you received money on that program, you may have to pay it back. If you're not able to meet certain requirements, you need to talk to your tax advisor and your financial advisor and make sure you do the right things to characterize that loan and how you used it. If you get to keep part of it, it is taxable income, but the tax you pay with it can reduce what you have to pay back to HHS. The EIDL grant, we have a lot of questions here I see on this. That was the $10,000 per business. It really turned out to be $1,000 per employee, up to $10,000 per business. Yes, that was tax-free, and yes, they changed that rule. You do not have to pay that back, and it does not reduce what you have to pay back on PPP. And then finally, the EIDL loan program. The SBA folks did a great job explaining that. I'd like to go forward, if I can, about 15 pages to where I have a chart called EIDL program, if somebody can help me get there. What I want to mention, there we go, keep going. Almost there. There we go. I want to mention two things about the EIDL program that really concern me. The first one is, if you look on the left-hand top box, you only qualify for this if you suffered a substantial economic injury as the result of the COVID-19 disaster. And by definition, if you look at the second box there on the right, a substantial economic injury requires that the business is unable to meet its obligations as they mature or to pay ordinary and necessary operating expenses. A simple loss of profits or drop in sales is not a substantial injury. So if you're taking this loan, I want you to remember that if you're not able to pay this loan back and you find yourself in a bankruptcy court where the Department of Justice has an office called the U.S. Trustee's Office, and you try to bankrupt this out, they may not let you bankrupt this out, and they may assert that you violated the federal law taking the loan if it was not absolutely essential. So a lot of our clients who got this loan have simply paid it back. The second thing I want to mention on the next page, if we can get to the next page, is that there are strict anti-distribution rules on their EIDL program. Without the written consent of the SBA, you cannot pay bonuses to any employee whatsoever. You cannot take distributions out of S corporations or partnerships to partners. So that's really, really tough stuff. The only exception is if you have written consent from the SBA. The SBA has been giving written consent by email. So every single EIDL borrower needs to ask the SBA for written permission to do the things that you see on the right-hand side here. The final thing I'll say in my 15 minutes on the EIDL and PPP programs is that you have to be very, very careful to follow these rules. If you try to do this on your own, you could damage yourself significantly. In addition, the EIDL program for a certain size loan requires that a lien be filed against the business assets. But if the EIDL borrower is an individual and this blanket lien is filed, it will disqualify your IRA. it's very clear in the case law that if you give a blanket lien on your individual assets to a lender, you will disqualify your IRA, have to pay income tax on the IRA plus penalties, and it will no longer be protected from creditors. Until we get a glitch repair bill on this, don't take the EIDL loan if it's going to result in a UCC lien filed against your personal assets. So that's my 15 minutes, and thank you, Brandon, for keeping me out of trouble, and we'll be here to answer questions as we go along here.
Anna, Renee, I just wanted to comment on something that I thought about as Alan was talking. One thing that I noticed with business owners that are filing taxes and doing their reporting on an accrual basis is that, and hopefully no one is on an accrual basis, but if you are, it's a great, it might be a good thing for you now. But if you're on an accrual basis, and check with your accountant, you might be in a situation where you have cash receipts in one quarter that maybe are deposit or deferred revenue. So if that is if there is an opportunity for you to adjust your financials to make them compliant with the way you file your return, and that will make you qualify for the PPP loan under that 25% rule, do look into that with the proper guidance from your accountants and your bookkeepers to make sure that you are aligning 2019 and 2020. You cannot just pick to adjust the one quarter that you want to adjust, but make sure that the two periods are comparable, and maybe that that will help you with that decrease in there. And Alan, if you have any comments on that, and you, Rick, please do chime in on that.
Good point.
Thanks so much, Alan and Ramona and Brandon, for your insights. That was really terrific. And I think obviously there's so much here to unpack. We could do days of material, I think, based on kind of the content we've gone through today. And I really appreciate you all kind of, trying to condense it as best as we can. And we wanted to make sure that we built in some time. I know there are a load of questions in terms of some of the specific programs that came up today. And we're very, very fortunate to have some folks who've got just an incredible array of experience working through these. So Renee, I guess I'll turn it over to you to moderate if that's okay. And Rick, actually, maybe I'll start with you if you had any comments before we jumped into the question.
No, I'm just so happy that the experts have weighed in on this, and I think most importantly is to listen to the attendees if they have any questions that they can. Now's the real time to go ask the experts.
Absolutely. We had a ton of really good questions roll in. And if you covered it during the presentation and I missed it, I apologize because I was typing. So there might be some repeats, but they can't hurt. Akira, the first one's for you. Do you know or can you recommend any legal services outside of New York City?
There are other resources, State Bar Association. I can actually send you some of that information afterwards. For small businesses right now. And I can send that information to you separately to pass on.
Thank you. This one's for the SBA. We had a few folks who were kind of, they contacted their bank for follow-up on their PPP. Let me see if I can get this right. And the bank told them to contact the SBA, but then the SBA told them to contact their bank. So for folks who are kind of in that middle, what should they do?
So if you recall, when I first discussed that, there are some background checks and some checks that the SBA is doing on these second draw PPP. So what's happening is they're putting on what's called hold codes, and the lender is getting clarification from the SBA to get it. They may need additional documentation from the borrower in order to release those hold codes. Contacting the SBA is not going to do anything for you. We cannot release those hold codes. They have to be released by your lender. So they have to work with their lender and make sure they get the hold codes released. Okay,
and typically how long should it take to go through that process?
It all depends on the hold code, depends on how many and what it is and what the situation is. So there's no black or white answer to that.
Okay, thank you. There was a question from Lisa, but she left, so I can't ask any follow-up, unfortunately. She got a message from the SBA asking her to upload her IS Form 940 or 4 quarters of 941s, and she's not sure what she needed to do for that.
Oh,
So are they assuming that they're talking about uploading their payroll forms for PPP? But
Yeah, I
that's to
think
the
it was because she was a sole
not to the
proprietor
S-
as well and didn't have employees was the issue she was having.
Okay, so they need a Schedule C to get, they need to either, if they haven't filed it, they could use a pro forma Schedule C for 2020 and submit it, or you could use a 2019 Schedule C.
For businesses who have to do an overhaul audit to participate in federal and state contracts, will the PPP loan count as a deduction to the indirect labor cost, effectively reducing the overhead for the year?
I don't know the answer to that question. I have to look that up. That has to do with 8A, and I have to add one of our 8A specialists about that answer. If you give us that question, we'll get a response and you can send out the answer.
Okay, sounds good. We had quite a few questions come in regard to the PPP 1 and 2 with the coverage periods. Is there a good slide for me to jump to refresh folks on that, or do you want to give a quick overview on those coverage periods?
Well, I think Alan did a good job explaining it earlier. It's either 8 or 24-week periods, but it doesn't mean you have to go through the whole 24-week period. If you exhaust the funds before then, you could still apply for forgiveness anytime after you've used the funds.
Okay.
So even though you select a 24-week period, doesn't mean the funds have to last for 24 weeks. You could ask for forgiveness as soon as the funds have been exhausted from PPP.
Okay, and this is one that is based on a couple of those questions that came in, just to give you an actual example. They've been trying to research to find out if they can base the payroll requirements for a second draw PPP loan off of our 2020 payroll and not 2019. We're in the healthcare industry and we have to reduce staff size because of the office limitations and would prefer to base the loan off of our new allowed staff size and not the pre-pandemic staff size.
They can use either payroll, 19 or 20, but if they go to their original lender, most of the times their original borrower, their lender of record from their first PPP loan, is going to use their original loan docs and just calculate the second draw PPP from the PPP loan from the first loan docs that they submitted. But they have to let their original, if they go to their original borrower for their borrower record from their first PPP loan, just let them know that they want to use the most current.
John, can I ask you something related to that? I believe I have the answer, but I'd like for you to confirm. Some lenders, when the business owners are asking to file using the 2020 payroll taxes or payroll expense, they're asking for the 2020 income tax return, which in a lot of cases hasn't been filed yet. So it's a strange request. What do you have there information?
So there's no requirement for it, but lenders have what's called delegated authority when they make these decisions on these loans. So if they feel that they need additional documentation to make a decision on that loan, it's the lender has the right to ask for those additional documents. So even though there's not a requirement from SBA, the lender could have in their guidelines, in their underwriting guidelines, could have additional requirements. So that's why they ask for the additional docs.
Makes sense. Thank you.
No problem.
For folks that weren't on when the panelists came on, I did warn them that my daughter was coming home from school and that it would be during the Q&A. So I do apologize for dogs and potential additional panelists. So this was a follow-up to one of the attendees. I was having trouble with her bank and sending her to the SBA and then back. Regarding the EIDL loan, last year we received the funds, then we returned it the next day because we didn't think the recovery was going to take as long and we weren't going to need it. Business didn't improve. So last November we submitted a reconsideration letter and we're waiting for a response. What should we do regarding reconsideration of EIDL?
Well, if they've sent in a reconsideration, they'd have to wait for a response from the reconsideration department in order to find out when they make the determination on that loan. At least they've done the right procedure to get those funds back.
There was some confusion between the EIDL and the EIDL advance. Could you quickly go over that?
Sure. So the EIDL is a loan, a 30-year loan with an interest rate. And SBA is the only lender that does that. The original EIDL advance, which ran out of money, was a grant to any business who applied for it, and they could have applied for an advance without applying for a loan. That program has ended, and the new program was the targeted EIDL advance that I spoke about. I don't know what slide number it is, but that was the one that you needed to be in an area that's on the map. I sent you, Renee, I don't know if you shared it. I sent you how you do the map, and you have to show a 30% impact on your business, loss on your business. Was there a third qualifier, John, for that? Oh, and you had to get the loan. You either had to get $1,000 to $10,000, and you'll get a letter from SBA, an email, or you didn't get any money and you applied, and you'll be in the second tranche, and you will receive notice from SBA, and then you have to, you know, as I said before, dot all the I's and cross all the T's. There's only going to be a one. What I didn't mention is, if you get the letter and you are confident that you qualify for the targeted EIDL advance, it's a one-shot deal. You send in your application. If it's right, it gets processed. If it's wrong, one of those numbers are wrong, you're done, you're cooked. There is no reconsideration on the targeted EIDL advance. The second group that will have consideration on it is those that applied and did not receive any money. And again, they have to meet those 3 criteria.
Thank you. Tara had 2 questions. For the EIDL targeted, to follow up on that one, how do you demonstrate low income if you are in a city and you don't fall into a low income area on the city map?
The map tells you yes or no. I did some work this morning before this in Manhattan, and it says if you're in yellow, you're a no. If you're in any of the other shades, it has an answer for you as to whether or not you can apply. Now, remember, the maps are based right now on the 2010 census. And so the maps sort of look like they did in the Great Recession and not what you think they look like now prior to the pandemic and, you know, when we were in the boom, boom economy. So go to the map and it will tell you yes or no.
Thank you. And that link is in the chat. If anybody has trouble accessing that, just let me know. You can send me a question and I'll answer that. When demonstrating a loss in gross receipts for PPP2 or EIDL targeted, does unemployment insurance payment count in gross receipts?
No. They're separate, but you cannot get, the day that you get your PPP loan, you must come off unemployment. Right? You can't be collecting both at the same time. You cannot get a PPP loan that has the possibility of being forgiven and remain on unemployment. So.
And Renee, I want to mention something there. So your unemployment benefits would not make it to your business income statement. So it's totally different. So don't book that to the business, okay?
Thank you. For PPP, for owners in a partnership that are not on payroll, is a document they need the K-1?
Yes.
Yeah, so what happens is, I believe line 14 of the K1 for a 1065 has self-employment income, which flows through to a person's Schedule C. They would be applying from the Schedule C for that, for those dollars. So they can have payroll in the partnership and include the dollars in that K1 in that one PPP loan. Doesn't have to be 2 different loans, okay?
I have something to add there too. So one thing that has come up is when you look at the K1, if you don't have your share of income in the self-employment section, it's most likely because you're a limited partner. So if you think that it was filled out incorrectly, then you have to potentially amend your return. But if you are a limited partner, your portion of income is not going to be reported as self-employment income. So
Yeah, so
that's
distributions can't be used for PPP from the partnership.
On the PPP loan application, they're not seeing a choice for 24 weeks. What do they do
It's not on the app.
for the forgiveness?
Yes, on there's it's part of the self-certification. I don't know what it is on the ones that aren't self-certifying. John, have you seen that? I haven't seen
On the forgiveness application, you're going to have a choice to select either an 8 or 24-week period and then do the calculation on the forgiveness app, whether it's the self-certification or the full forgiveness.
Okay, and if you are having trouble with the application or you want someone to review, I'm sure Andrew will mention that our advisors would be happy to help out and look into that for you.
Andrew's a forgiveness expert.
Absolutely. You mentioned this earlier, but we had a question come in later on about moving for the EIDL. If you only received a partial EIDL the first time and you have moved, are you eligible for any more funds? Can you clarify on that one?
Sure. So the SBA is not making an assumption that you're still located at your original address, and so that you, just because you receive a letter doesn't mean that you are eligible, and you have to go through that check of using that website, making sure that you're eligible for the targeted advance based on the map and the reduction in 30% more reduction, economic injury. And everybody has to look and see what those definitions are and as they apply to their own business. And again, they can seek out Andrew and his advisors for help on that. So
He's an EIDL expert also, Andrew.
I probably should be by
covered.
now, but I'm not. Do you know when the information on when the application process will open for loans over 150K for the PPP forgiveness?
That depends on the lender. I know Chase is going to be starting to accept applications in March. Some lenders are already accepting applications, but check with your lender who you got your loan with, and they'll give you more information, because that forgiveness app has to go to your lender, not to the SBA.
all right, so one of the suggestions that I make is that you print out the general one that's on the PPP, the SBA PPP website. But as John has said, banks can ask for more information. So at least have the basic information. And we've seen a whole variety across the country. Some smaller lenders have opened up because, remember, it's their capital that they're lending in the PPP, and they have wanted to process the PPP forgiveness pretty quickly. And there are other lenders that are not yet open to receiving the PPP forgiveness application. We hear that they're waiting for final rules, so that they only have to do it once. Those, for example, that have deducted the $10,000 PPP in the loan forgiveness now have to go back and repay that, subject to the new rules. So, some banks have chosen, and when I say banks, lenders, micro lenders, credit unions have chosen to wait to open that up, as the program has been pretty fluid, as mostly everyone on the panel knows.
So just to follow up what Beth said about the that EIDL advance, some people did get forgiveness on the on their not that EIDL, on their PPP loans, and they didn't deduct the advance from their loan. The SBA is going back to those applications, and they're going to notify those businesses, and those loans will be forgiven for the advance part, just in case you got forgiven before the new legislation passed.
Regarding PPP forgiveness, what kind of record keeping should I keep if my business pays employees in cash?
I suggest that you stop paying your employees in cash. I wouldn't pay using cash.
Right, you know, and one of the recommendations that I always make is that when they do get their PPP funds, they should open a separate account and put those funds in that separate account so they can account for them separately from their operating accounts. If they pay in cash, I guess whatever the payroll records will show that they paid in cash. But Alan, I think, makes a better point than I do.
Right, and even
I think this is kind of a, you know, an issue area that clearly, you know, there are probably more than one of you on the call that have this sort of question that comes up. I think ultimately, you know, our business advisors work with our clients to try and formalize structures. I think that, you know, Alan's answer is spot on, but ultimately you want to be able to make sure that you have the paper trail for programs like these, and then be able to kind of reflect, you know, the true operating, you know, profitability of your business. So you can really access kind of, you know, long-term finance and be able to put yourself on a better firmer footing.
And also, if I could just jump in, and this is a serious point, we're getting hundreds of calls at the district office. I don't know my first PPP loan number. I don't know whether I use my social security number or my EIN number. I don't know. That's not going to be an acceptable answer at the end of the day. You know, we always talk about not just working in your business, but working on your business, and your record keeping is extremely important. Although you were self-certifying, you were required to keep all your records for 4 years on the PPP loan, and that's if it's forgiven. Of course, if it becomes a loan, the loan is 5 years. You need to keep your record and retention system in place in case there's ever a question. Now, anyone over $2 million is getting an automatic audit by SBA. And but for all of those businesses that filed a self-certified form under $150,000, you need to establish good record keeping, put it away. Who knows what's going to happen? And, you know, we can't predict the future, and you need to show what you've done and be able to verify your self-certification, because you're certifying that you're not committing fraud on that, and that this is, you know these statements and declarations to be true. So in all seriousness, think about it. Think about where you're keeping your information, and you know, and spend some time on your business. It's just as important as to whatever your business is.
Thank you. If you apply for forgiveness in 2020, so I'm thinking for the PPP, and you don't hear back before you have to do your corporation tax return for 2020, when do you take the loan off the books, 2020 or 2021?
I can answer that. So since it's not going to impact your P&L anyway, so your taxes, I would leave it on the balance sheet, on the loan, in the loan section until you get forgiven confirmation, and then at that point move it to the equity section. It doesn't have to go into your P&L at all. So I'll do it in 2021 when you get the forgiveness. That would be my recommendation. Alan, you can chime in.
You know, there's one issue that some borrowers may have, and that is you may not have basis to take your losses unless you consider the loan to have been forgiven on or before December 31st, 2020. So it may be better from an IRS strategy standpoint to consider it forgiven and get it off the books because of that issue. I hope that Congress and the new president will clear that issue up, but until then, there is a question as to whether if your deductions exceed what the basis of your stock would otherwise be. And that's a technical thing to talk to your CPA about.
Yes, good point. So they can claim the losses, right?
Thank you. I could go on quite a bit longer. I want to be respectful of everyone's time. If we didn't get to your question today, we are going to do an export of the questions. So we'll go through those. And if we didn't answer your question today, we'll follow up and get some help for you. You can also reply to the GoToWebinar email, and that will go right to PACE. If you are not in the PACE area and you want to locate a center closer to you, you can go to nysbdc.org. You can go to our locations page and you can find a center that is close to you. Andrew, I'm going to turn things over to you to close things up.
Awesome. Well, thanks very much, Renee. First off, to all of you who attended today, clearly having 200 people kind of with us, even beyond the extended time period, is an indication that this is incredibly important material. So, and for those of you who were unable to join us, you know, we hope the webinar recording will be helpful, and certainly the attachments as well. So we appreciate you all kind of sticking with it. First off, I wanted again sort of thank, you know, amongst the, I guess, the Brady Bunch squares here on my screen. I'll start with, I guess, Rick Kravitz and Steve Mezio, who is, I guess, you know, I guess not among the 9, but wanted to thank you both for kind of conceptualizing this and bringing this to fruition. It was really insightful and really helpful. So thank you both. To Beth and John from the SBA's New York District Office, I guess for your continued partnership, and really appreciate you bringing this together, and I guess for your insights and support of our clients. And Alan and Ramona and Brandon, thank you so much for kind of the insights, and your presentations really, you know, very, very helpful. I think, and certainly the attachments as well, I think will be very, very useful for our clients. And finally, Akira Arroyo, a longtime partner and supporter of our small business clients. Thanks. And the middle square, I guess, is it the Mr. or Mrs. Brady? I guess all in one square. Renee Goodnow was awesome as always. But thank you for managing and leading this madness. There's a lot of resources out there for small businesses. You know, we're part of a network of centers. We're here to support you and help you. They put into the chat finally about a link for you as how to connect with a one-on-one business advisor session. And as a reminder, all of our sessions and services are offered to you at no cost. So please do take advantage of it. There are great resources out there available for you to support and help your small business through